Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It's Tuesday, April 5th, 2022. It's 6:22 in the morning. Don't forget to run your player at 1.5x if you're new here. Quick look at futures. Oil up about 0.5%. Equities are more or less flat, a little bit red, not too bad. Bitcoin's up 1.5%. Copper's up 1%. Nat gas up 2%. Gold and silver are flat. Not a lot going on earnings as we wind down the Q1 earnings and get ready to ramp up, or I guess it'd be Q4 earnings, and getting ready for Q1 earnings coming out here shortly. The only thing I got on the macro front is Lael Brainerd, FOMC vice chair, I guess she is, at 11 a.m. She hasn't spoken in quite a while, so I'm sure people will be listening for that. And then, of course, we've got the FOMC minutes coming out tomorrow at 2 p.m. I think folks should be ready for that one. That too will be closely watched to try to gain some insight into what the Fed's thinking on how aggressive they're going to be on rate increases and QT, qualitative tightening on the balance sheet. I think everybody is more or less figuring on a 50 basis point rate increase at their next meeting. But it always seems to, you go through and you kind of say, yeah, everybody expects that. But then when it comes out, there's a big reaction, which is often head scratching. But they do their best to give everybody a heads up what's going on. Sometimes there's a reaction and sometimes there isn't. So we're just going to have to wait and see. So let's dive into the charts. The VIX continues to get crushed. Remember, we were up here above 30 forever. I don't remember how many days it was, but 15 or 20 days above 30. And then they finally broke it, and it's been down ever since. We're down here in the 1850 range. You might want to put an alarm on 18. You can see that's been a line of demarcation across the chart where it has acted as both support and resistance. So if we were to crack 18 to the downside, I would expect markets to be rising. If we come down there for a touch and then we start heading back the other way, then probably have some red on the board. Not much going on with the oscillators. I've checked both the NASDAQ and the NYMO for the NYSE. Both of them kicked up a little bit. We're still in that upper third of the zone, but not overdone. Could this go up? Could we have an extension of the rally? Sure. We could go back up here, get into the 60s and even 70s. In the days and weeks ahead. At this point, I think it's in yellow flag country. I would not be, you got to be aware of it for sure and be guarded in your positions for sure. But I don't think it's, sell everything and get short your whole portfolio because of this. Now, when you get down, or up, in this case, up into these regions, and you get a spike like that, then that would be more of a get out of Dodge moment on a spike up into the 70s, 75s. At least get some hedges on, stuff like that. So we'll have to wait and see. SPY, decent day, up 0.86%. I think you can, if you got long on 450, I think you can move your pivot up to 455. I think the real support is back here at 450, But if you wanted to play it close to the vest, you could certainly make a mark here at 455. Notice we've got all the faster moving averages now coming back up to a bullish stack. Remember, we've got bullish stacks and bearish stacks. What's a bullish stack? Well, on the bottom, you've got the 200, then you got the 50, then you got the 20, then you got the 8. So, bullish stacks are called that for a reason. All those EMAs are going to act as support now on any kind of a down move. So, be aware of that. Looking at the 2 hour, just getting some finer resolution on it. I think here above 455, we've got an open door up to 461, back of this prior high area. So notice also the RSI, after that little dip, has moved back above 50. And here we've got the momentum flattening near the zero line and preparing for what could be, a bull cross near the zero line. And that would be very bullish for extending the move, because, oftentimes the zero line acts as support while above and resistance while below. Here was a good example back here when when PPO was below, it came up and then got rejected at the zero line and came back down. So if the zero line can act as support here and we get a curl up in the PPO, that would be a confirming signal that price wants to go higher. So I think SPY looks pretty good. Not a lot of new information here. You just got a little finer resolution on some of the levels. I think as long as it can stay above 455, 456, you got a chance to get up to 461. Qs, nice day yesterday, juiced up by Twitter, up 2%, with Musk taking that 9% position in Twitter, got the FOMO going yesterday. You can see here we had a prior high which lined up with this the fib retracements, the 61.8 retracement at 371.50. That was right here, and so now we took a little dip, came back to the 8-day, and got a good bounce yesterday. So I think you can get long. If you didn't get long down here, your next opportunity is on a break above 371.50, and then the target will be this open gap, and we'll see it a little better here, where we've got a gap that comes in at 375 and basically extends to 380. I think the exact point where that comes in is inconsequential at this point. Your big resistance is going to be 380. Let's go back and look at the daily just to show you that. We had this trading range up here where we stayed for a couple months between 380 and like 403 at the prior highs. So if there are people that got trapped back here, then that's what gives you the line of resistance. And if price were to break back above 380, then the door would be open for making a run back at the highs. Why? Because you're entering that trading range from below, recapturing it, going into the bottom of the box. Then there would be an opportunity to go to the top of the box. So here today, I would set your alarm depending on well, of course, if you wanted to trade it or not. If you don't want to trade it, you don't got to set an alarm. But I would set one right here at 371, 371.50, and then that will give you an opportunity to get up to 375 at the bottom of the gap, and with any luck, get a break into the gap where you've got essentially a $5 run for a gap fill. So that would be a really, really nice trade to have. And the line is very clear here. You can see going back, there was some resistance. And notice there really aren't any volume over price bars to offer a ton of resistance there. So I think that would be a nice trade. Here you see it on a 30-minute chart. That prior high right here at 371.50-ish. Get long there. See how price handles the bottom of the gap at 375, and then making a move to the top of the gap. Actually, as I think about it here, why don't you set yourself 2 alarms? Set one at 375, and then set one wherever you want to engage the stock. And then if you end up getting in, you'll get that alarm, get in, and then you'll get another alarm when price is at the gap. And also if, say, something happens in the morning, you miss that entry, and then, you forget about it, whatever, then you'll get another alarm at 375, and then that will give you a second bite at the apple for the $5 gap fill. I think that would be good. So as long as you're setting an alarm for an entry down here, go ahead and set one at 375, because you definitely want to be long into that gap, which is a pretty good size. IWM price is trapped between the top of this trading range at 206 and this 1-year resistance and the 200 coming in right here at 210.77. And if you go back, this 208 has been a big problem for IWM. I marked it on the other chart as well, but you had a rejection here, you had a touch here almost, rejection. So we had this breakout, and then it got turned around and it fell back below. I think 208 is a really, really important spot on IWM. And if, the broad market is just going to go, it can't go unless IWM breaks above 208, recaptures this 1-year resistance for real. This was a fake. Recapture 210 for real, and then go. So I think IWM is going to be an important one to watch. And if you were interested in trading it, I would certainly, have your alarm in and around 208, and a break above would give you a run at 210, and then see how it handles it there. And if it breaks out, then you got to run at 212. So watch that pretty closely. For any new visitors to the channel, thank you so much for spending some time this morning. I try to give members good, accurate, actionable, objective levels to trade against each and every day, and hopefully that sets you up for a inspired day of trading that is profitable, and with that plan in hand, your execution will get better. If that appeals to you, please hit the subscribe button and the like button, and jump over in the show notes. You'll find a link to the blog site where you can drop in your email address, and then morning, noon, or night, whenever I send something out, whether it be a trade idea, a market observation, something on trading psychology, you'll get it right in your email box, and you'll also get an invite to our trading room and we'd love to have you there. So I encourage you to do that. And if there's a sector or a stock or something that you'd like me to address in a future video, please give me a comment, and I'd be happy to do that for you. And pass the link along to others in your trading circle that may benefit from the work. And I appreciate that so much. So jumping into Fatman, we're coming up into some very, what I think are important areas. So let's take a look at it. Facebook, big rug pull, follow-up selling, bounce. We are right here testing the 50 EMA from below, critical spot. You see where the fib retracement levels come in and where the big gap resides. We talked about, in earlier videos, getting long in the 210, 212 area, looking for the mid 20s to low 30s. We're there. We're at the 50 now. On a break above the 50, if you're long, then you can kind of recalibrate everything around the 50. And if you got long anywhere in here, I would hate to see you give, that back on some kind of a rug pull. What you can do is, wait for the break above, and then you can set your stop a little bit below the 50 on any kind of move backwards. And if you're not in, but you're interested in Facebook, you can use the 50 as an entry level, or you can, if there's a red day today and you got a pullback into, 227.25, you could use that as an entry as well. So you go up and come back. You can get on a lower time frame chart and find out exactly where that level is. But once price is above the 50, then you start looking at where's the gap and where are the fib retracement levels for various targets. But if things get really bullish, you've got a $70 gap here that you certainly want to be involved in. And hey, if you don't have much faith in the rally, you can just set your alarm at the gap and say, you know what, I'll deal with Facebook if it can prove it can get up to the gap. That'd be perfectly fine as well. But just know where these levels are and set your alarms accordingly, because of course you'll forget if you don't set your alarms. Apple, nice day, 2.37%. We had an all-time high. We've done a lot of back and forth since then. Most recently, we put in a high here at 179. These levels have worked great. We got moved down to 172, where support was found, and then we made a move up. And you can see that price, once above, consolidated right on support at 177, and then there was a push late in the day towards 179. So here this morning, I would alarm two levels. I would alarm 179 for the breakout, which I think you can get long, and with a target of 182.50 at the prior high. And I'd also alarm 177. If there's any kind of a wobble on the open and you get a move back towards 177 that holds, then you can get long against 177 and hopefully get a move back to 179. And then if all the stars align, you'll already be in and get that breakout above 179. So, this looks good. PPO is broken back above the zero line, and RSI is back above 50. So those are supportive of a move higher, at least at this point. So I think your key levels today are 177 support, 179 resistance, and 182.50 as a target. Tesla, we had said for a while, breaking back into this $200 trading range was going to be important. We had an 1100 target. Then we said if 1100 is broken to the upside, we'd project a move to the top of the box. It looks like it's heading in that direction. I know several of you are already long. I'd stay long against 1100 with a target to 1200, and if there's a breakout above 1200, then you can recalibrate everything at the highs and stay long against 1200. If you're not in, I don't think you can take it here. I think you gotta hope for a back touch of 1100 to get long and then get a move back up. But unless you want to just arbitrarily set a stop and just buy it on the open, you could do that. There's just, inherently more risk in that kind of strategy. Normally what I like to do is, if I miss something, try to wait for it to get to a known level that I can shoot against with some level of objectivity. So, but Tesla looks like it's on its way. Another very clean setup here. This is Microsoft 60-minute. We had the prior highs right in here at 315. We came down to this marked level at 305, which was the original breakout. Now we're back up to 315. Set your alarm at 315. Get long on a break above and look for 321. I think that's the trade for today on Microsoft. Amazon, 3,400. Came back to test this level. Spent a lot of time there in recent days where it had found support before. Now we got the move. I think you want to get long above 3,400 for a move towards the top of the box at 35.50. And if we just jump over, if you're new here, we had the double bottom, had the measured move target, which was back up to the highs. We said that might be a little bit ambitious, but for now, we can shoot for the top of the box. And as improbable as it looked down here, now it looks, I don't want to say foregone conclusion and jinx it, but it looks like it's trying to break higher. And we've got a level here at 3,400 that if it can break above, there's really not a whole lot stopping it from making a tag at the top of the box. So I'd have your alarm at 3,400 if you're the least bit interested in trading Amazon. Google, here's another very nice, clean setup for you. We're right at the prior highs, right here at, 28.65. 28.60 says here. Yeah, the breakout would be a little higher than that. 28.65, I'd say. But anyways, on a breakout there, you can see how clean a line that is. Breakout there, and I don't have the targets marked, but what they are 29.25 is your first target, and your second target is the top of the box at 3,000. We can take a look at that right here. Here's where we're at. Break above 29.25 and then go back to the prior highs at 3,000. Netflix continues to grind. We had the big gap. It got filled halfway. Follow-up selling, churning back, recaptured the 8 and the 20, and now faces a big level at between 400 and the 50 EMA, which comes in at 405. So if you're not in this, I would certainly have an alarm either at 400 or 405 where the 50 EMA, and this is a setup that's very similar to the Facebook setup in that once it breaks above the 50 EMA here, moves into a big void in the chart where there's not going to be a ton of resistance, and then you've got a $40 gap that's yet to fill. And in light blue, I've got the Fibonacci retracement levels, but those you can see those really don't come into play until price is already inside the gap. So those aren't going to be of much use at this point. I think right now it's just, can price take out this large volume over price bar and get above the 50? And what I really like about this setup is, this is formidable resistance, due to the size of the bar. And then you've also got the 50 coming in at the same spot. If it can get above that, what was once resistance becomes key support. Then there'll be a lot of support below. And then you can look out in time and, create a strategy of what you're going to play for. And I think what, in this particular instance, your first objective is just to get to the gap. But that's $60 higher. That ain't all bad. And then a move to fill the gap and back touch the 200. So you're looking for a $100 move between 400 and 500 on the gap fill. Another very nice clean setup for you guys today. We talked about 270 being a very important pivot on the semiconductor chart, and now price is just below. Set yourself an alarm at 270, be ready to go long, and you'll be looking for 276 and then 280 as a second target on the semiconductors. So, it's right there, and you get a break above. I think you can and should be taking that long. Yesterday was some disappointing price action in the marine shippers. I know quite a number of you are in various names. This is Star Bulk Carriers. Yeah. Down 7.5%. There was some data out yesterday showing that shipping rates have come down a little bit. We're just going to have to watch this really, really close and, honor stops if they get to them. There's a lot of names out there. A lot of you people are in ZIM, Z-I-M. That was down 5-something%. They were all down significantly yesterday after really, really nice runs. So if you're in those names, reevaluate the charts and figure out where you're going to exit if that becomes necessary. I still think the group is positive, but using this as an example, remember, up here, price was above all the moving averages, and then this big red bar here puts price between the 20 and the 50, and that is the zone where you've got to be tactically very careful. And if price were to lose the 50, then nothing good happens under the 50. That would definitely be a place where if this came down and can't bounce at the 50, then I think you got to exit and reevaluate it down the road if it bounces back up. And so just to recap that, remember we took a breakout on Canadian Pacific rails, failed. Can't remember if it failed Friday or Monday. No, it would have been Friday of last week. All the rails got absolutely obliterated. We weren't in any of the truckers, but they got obliterated. A lot of the, JB Hunt and Heartland and all those Old Dominion, all the truck lines got killed on rising costs, etc., with the diesel fuel and maybe some of their freight volumes were down as well. And so now we've got the marine transports that got killed yesterday. So in successive fashion, they've gone after all the transportation names, trucking, rails, marine transportation. They've gone after FedEx, and I can't say I've actually looked at UPS lately, but I wouldn't be surprised if they were down as well. So we got to watch these freight guys, whether you're in trucking or rails or marine transportation. That's never good, especially if you see volumes start decreasing. Then it calls into question, what about the recovery? Is the economy really slowing? And then you roll into Fed rate hikes into a slowing economy, all that kind of stuff, and then you're really in the weeds after that. So anyways, we got to watch price, especially if you're in some of these names, and see what happens. So let's wrap it up there. Remember, Lael Brainerd, 11 a.m. If you're around and want to listen to that, I'm sure it'll be out there somewhere. Other than that, let's see how it goes today. This has been Chris Buss with Traders Profit Compass. Hope you have a good day, and talk to you next time.